Hey everyone, we got to look at this new proposed second mortgage by Freddie Mac, which is going to make a huge difference, both if you're a homeowner, especially if you have all this equity that's tied up in your home. And then on top of that, if you're in the real estate industry, this could be huge too, because one of the reasons I do these videos is not just look where the market's at, but as Wayne Gretzky used to say, where the puck is going. And there is so much tied up equity in everyone's home. This could be a huge market maker. There's literally trillions of dollars in home equity out there right now that's kind of untapped. Hey everyone, this is Rayce Robinson, your favorite Florida mortgage broker. And let's jump into, I want to show you what Freddie Mac is proposing and then give you my thoughts on why I think this is a big deal. So Freddie Mac is proposed purchase of single family closed-end seconds, and looks like that they're ending comments by May 22nd. And when you look at the actual document, of course, they name these things weird. This is billing code 8070-01-P. But the more relevant part, and I'm not going to get into this 14-page document, you can find it on their website, is this part here, the proposed new product. In the current housing market marked by higher mortgage rates, lower housing supply, and continued year-over-year housing price appreciation, existing borrowers face limited options to access the equity in their primary residences. For the many homeowners who purchased or refinanced their homes during a period of lower mortgage rates, a traditional cash-out refinance today may pose a significant financial burden, as it requires a refinancing of the entire outstanding loan balance at a new and likely, let's take out the word likely, much higher interest rate. Homeowners may also use second mortgages to access the equity in their homes. For a second mortgage, only the smaller second mortgage would be subject to the current market rate, as the original terms of the first mortgage remain intact. Moreover, second mortgages are typically offered at a lower interest rate than some financing alternatives such as consumer or personal loans. This is important because a lot of people might say, well, Rayce, there's already home equity lines of credit out there. I mean, I have a home equity line of credit. What makes this compelling is now you have the GSEs, Freddie Mac, but Fannie Mae is likely to follow suit, coming in and insuring these loans. What does that translate to? That translates to much lower rates. If you've got a home equity line of credit, you usually realize that they're adjustable rates, they're very high, and if they're fixed rates, they're even higher, and they're not very flexible. So having Fannie Mae or Freddie Mac insure these loans is going to make them more accessible, easier to qualify for most likely, and also give lower rates on these products. And that is one of the most important things, because right now, the amount of wealth in people's homes is really unprecedented. Now to show this, I pulled this CoreLogic chart up, and this is from Q4 of 2023, so it is getting a little old. CoreLogic's data can be a little old, but it's very good. And you look right here, they're showing national homeowner equity. So you have $1.3 trillion in national home equity, meaning so many people have so much wealth, but it's all tied up in their homes. And another good chart that they have here showing the same kind of thing, but in a different way, negative equity share, meaning properties that have negative equity. And look how much of the US is pretty much low. Obviously, there are areas that are high, but they're saying high is 2.3, 3.6%. Florida's at 1.1%. Which makes sense, right? Because so many people have lots of equity. We had some of the highest appreciation over a few years, and now all this money is tied up. But what is actually happening with inflation and all of these things? Americans are getting in debt at a record pace. This is a chart that shows credit card debt since 2003, and look at the spike up here really over the last couple years. And that means that obviously as inflation gets higher, purchasing power goes down, and people rely on debt to get through. Meanwhile, they have all of this equity in their house, but they don't want to do what we call a traditional cash out refinance, because you have to take the whole mortgage and make it a much, much higher rate. So if you think about all of a sudden you could get a second mortgage at a much more competitive rate, what does that mean? It's simple. If you make access to money easier, people will take advantage of it. And there's probably a good and a bad side to this. The good side is if you have $1 trillion worth of equity that's released, you're actually going to have people being able to pay their debt off, be in better financial shape. At the same time, how do you create inflation? A lot of the stimulus created inflation. And so if you release a lot of money into the economy, then that tends to drive prices up. So you could argue the fact, and I have seen some people say that this is kind of inflationary. I personally don't think enough people will take advantage of this, unfortunately, where it would do that. But for a lot of people, this is going to be a lifesaver to be able to do, instead of a cash out refinance, take a $40 or $50 or $60,000 amount from their equity, keep the super low rate that they got, and be able to pay that debt off. The other side is for like someone myself in the mortgage business. The number one thing that people don't take advantage of is becoming wealthy through real estate. And why do I like that? A personal strategy I followed for a long time is it's almost impossible to get wrong. I invest in a 401k and IRA, both through myself and my wife, but I really don't know that much about the underlying companies that we're investing in, which is why we tend to do index funds. But on the housing side, even if you get it completely wrong, if you would have bought a house in 2008 during the right before, say 2007, right before the Great Recession, and you own that house now, that house would be worth a fortune from what you paid for it. And as long as you didn't have a negative cash flow when you bought it, you really can't go wrong. That's why I like investing in real estate. It's something that the average person can do. And if the biggest limiting step for people to buy investment property is often the down payment because it requires more money. But now if you can access that equity in your home and use leverage to become wealthy, that's what you want to do. And that's actually where you have somebody else paying your mortgage for you. Now, I don't think everybody should be an investor. You should have really no debt or low debt, in my opinion. You do need some reserves and things like that. But it is very, very easy to get involved with investing in real estate. And if you have someone explaining or mentoring you at all, it's very difficult to get wrong if you're looking at holding the real estate for long term. Flipping in those kinds of things are a completely different thing. Now, on top of that, we have potential access to new amount of equity, which I think will help the housing market. And then at the same time, we have rates actually starting to go down. Big drop last week from 7.5 down to the low 7s. That's one of the bigger moves that we've had in a while, which is great news because, as rates fall, the market's going to pick up. I was just at a seminar where we had an economist out there talking about what's likely to happen over the next couple of years. And there's almost nobody predicting higher rates by the end of this year and throughout next year. What does that mean? Everybody, if you go online, you can pull up Zillow, CoreLogic, Redfin, whatever, predicting some percentage of appreciation. So there really is no way, there's no big market correction coming, as I've done lots of videos about. And as rates fall, it's going to push people in the market. And if you have homeowners that can buy investment property and keep their current low rate, I think that's also going to add more people to that. Now, this part, if you're in the mortgage or real estate business, I think it's important to learn to this particular part is if you're looking for a reason to reach out to your past clients, people that you've worked with before, this is a really, really good idea. I was just in a seminar in Clearwater, and one of the things I see when I see very successful realtors and lenders is they don't do a million things right. They just do 2 or 3 things really, really well. And those 2 or 3 things are usually something that other people aren't willing to do. So let me suggest an easy strategy. You call 5 of your past clients every day and say, "Hey, Mary Sue, this is Rayce Robinson. I helped you buy your house last couple years, list your house, whatever the case is. I don't know if you've been paying attention. The market's starting to improve. There's been lots of appreciation. Just curious, have you ever thought about selling your home, or do you think you'll be moving? Do you know anyone?" And add in, we're getting ready to have the ability to get some second mortgages. We could release some of the equity in your house. So if you've got some debt, I can have someone call you to help you get paid off. And more importantly, if you ever thought about becoming a real estate investor, I'd like to talk to you about what that would look like and talk to them about how to access equity to buy investment property. And multifamily properties, in my opinion, are going to be the properties where you might see some softness in price if you pay attention to the data and the way that works. And a lot of this commercial debt that's actually starting to reset, and you're seeing more and more commercial property go on sale in a lot of markets. So those are really, really good conversations to have. Again, that's part of the daily success plan. Just pick a few things and do it really, really well. And the big answer to that normally is, if other people aren't willing to do it, that's probably what you want to be doing. Also, I'm going to be doing a class coming up on Inside Zillow's Proposal Expert Analysis. This is with Tristan Umada, basically covering the Zillow touring agreement. I also did a video on that, which I'll link to. And some of the people commented to me that it's good or bad or whatever. I think it's a very, very good frame, if you're in this industry, is not to look at things as good or bad. They're just tools. And you don't get to pick what things are out there, but you do want to know what they are and figure out, is there a way to implement that in your business. So there's going to be a lot of conversation, I think, around these new second mortgages. Again, it's not been approved yet. I think it likely will be. Fannie Mae will follow suit, and that will open up some opportunity to have some really good conversation. Could you do a video about it like I'm doing now? Sure. But what really is going to make a big difference is to reach out and have a personal conversation with someone. The way that I built a business is I think that personal conversations, taking a personal interest in both the client situation and working with a real estate agent is really what makes a big difference. Anybody can do a video. It takes a little more to have really focus in on what someone says and focus on really what their needs are and try to help them. But I'd be honored to help in any way. If you have any questions on this, mortgage products, or how to partner with us, I'd love to help. This is Rayce Robinson, your favorite Florida mortgage broker. And as more information becomes available that moves the market, as always, I'll cover it here. Have a great day, great week. Talk to you soon.